So you're in your condo and all of a sudden the roof breaks open and water comes gushing out. Now this is a 2-layered condo, so you weren't quite sure what happened. The question now is, who's gonna cover this? Is this going to fall on your insurance, the person above you, or the association? Well, today we're gonna explain condo insurance and we're gonna go over those different situations. Also, we're gonna cover what companies you should go with and some discounts that you should lean towards. Now, I actually took this article from a company called Cover. I will link them below where they offer quotes and multiple options for condo, home, auto, all of that stuff. But I really liked the article that they wrote, so I will put an affiliate link down there so you guys can review that as well. So in this situation, we're talking about condo insurance, and the question being is, what's the right fit for me? Well, first off, I can tell you right up front, if you're already charged or paying more than $600 a year, in some few states, the 700 marks is kind of the top. For condo insurance, you're already overpaying. Now, it does depend on what type of coverages you have, but let's dive into that a little bit further. So what is condo insurance? It's essentially what we call a walls-in policy, because there's the association, which you may think is covering you, it's not. That's what they call a master policy, and that's just the association protecting common areas. So it's liability risk if somebody slips and falls outside, something happens, the roof caves in, they're covering the roof, they're covering the building itself in general. And what happens is you pay an association fee, so you're technically paying for that insurance, even though you don't do anything with it. It's up to the condo association to do all of the legwork there. So what your portion is you're paying a piece of that insurance and the maintenance of all of the buildings in your association. You're sharing the cost essentially. If somebody gets hurt and there's a big lawsuit, if a building burns down, your association fee is going to go up, whether it was your fault or not. That's just part of what you bought when you bought into a condo with an association fee. Well, they don't cover the inside of the building because that's up to you. You own the portion of that property and you're responsible to insure that part. That's your personal property and your personal liability that you have to protect as well. If there's a fire, they're not going to cover your TV, your couch, your shoes, all of your personal belongings. They're not going to replace the walls, the flooring, the countertops. All of those items are going to be in your plate. And that's where insurance kicks in and you have that walls-in policy. So in this situation, we used an example of the roof caved in because somebody else's water burst. Yes, that is going to fall under the person who is liable, but in most cases, you're still going to probably start the filing a claim with your insurance, get it taken care of. Your insurance will in turn go after the other person. Now, in home insurance and condo insurance are almost identical in the aspect as if you file a claim, it doesn't matter. You're a higher risk, and that is going to affect the rate. Not major, you're probably going to see about a 10 to 15% hike in the rate. And if you're paying the $400 to $500 range, you're going to see an extra $60 to $70 a year for the next 3 years, which I know sucks, but you just have to decide whether it was worth having that $30,000 claim covered for an extra $60, $180 for 3 years. It's up to you to decide if that was a good deal. Now, this cover article went in to explain what the area affects the location and how that affects the pricing. That's correct. The area that you live in, the response time of the fire station, the age of your building, all of those little tiny factors, just like a home policy, is going to affect a condo as well. If the roof is 30 years old and the association is neglecting it, then your insurance isn't necessarily going to kick in some of that bill because it's not their fault that your association wasn't taking care of the building. You're most likely covered because you're going to have to go after the association in this situation, but it's possible that could be happening if they're not taking care of a tree that has termites and it hits the roof and it goes through your building. Then you technically have insurance for it, but there's a good chance that those claims could get denied based on the neglect portion. The question being is it your neglect or is it the association's neglect? Now that's a whole nother video. We actually do have a claims video up here that you can watch through. So if you want to get through kind of how to handle claims and whatnot, that'll actually go through that portion. From there, the most important thing that people ask me is, what company do I go with? And how do I get discounts on this policy? As a really good example, I've gotten my parents down below $200 a year. I even upped their coverages to give them a better deal just based on the company. Now that's specific to our state. We had a company in Michigan that you go through. What I would recommend is in that link next to that article, they actually shop you multiple companies, and this is one of the best pieces. There's a little bit of a warning I'm going to give here in just a moment, but I love the fact that you can go to one place, type in and text or call or whatever you prefer and get in contact with somebody that's going to give you a good rate. If you don't like that rate, you can tell them what your thoughts are, and then they can keep shopping for you. The part I would disclose to you is know what you're doing, and that's hard to say that you do or don't know. This channel is full of data and full of coverage. I'm actually going to link my home insurance because a lot of these coverages, not necessarily the coverage A or the B, because that's kind of part of the association, but you're going to see those in those videos of what personal property covers, what your liability is going to cover, and those different endorsements that you can add. All of those are very similar, if not the same as a condo policy. So I would recommend that you start at coverage C and then move your way through those endorsements to see what options you have as far as what coverages you should go through. Here's where you have to decide what your income level to what insurance level you want to have. The biggest part that I see is not so much the water stuff and the fires and the theft, although those are huge important pieces. Those are the most likely problems to have, but the most impactful is the liability portion. If you have somebody that gets hurt in your condo, your unit, and they sue you for some reason, you're medical exhausted, most people don't have more than $5,000 or $10,000 medical. So if someone gets hurt and it's a $300,000 claim, they have to go after your liability portion to claim that and get it back. Now, this is usually your friend that this happens. They might have cut their finger or something happened and they tripped and the hand went in a blender. I don't know the situation, but whatever that situation is, you want them to be taken care of. Your insurance is going to have to foot that bill, or at least fight and explain why that they're not going to cover that situation. This is where these do-it-yourself apps do tend to lack a little bit. They tend to default to the 300,000. I personally don't like that level. It fits a handful of people and that's why they do it, but it's not a whole lot more to bump you up to 500,000. So talk to the person if that's an option. If you have a good income to protect, if you have a nice home that has a lot of assets, you own property, land, anything that could be taken from you in the event of a lawsuit, you want to make sure that your insurance has enough or more than you to cover those situations. Now, yes, it is important, like I said, to have the fire and the theft and the right deductibles and all that. If the money is the biggest piece to you, here's what I would do. I would lean towards those higher limits if that fits your lifestyle of where you're at. I would also say if you're trying to cut down costs, don't lower those, don't remove them. I would change the deductible. I would rather that you have a $10,000 deductible, lower the cost to $100 to $150 a year, then lower the liability down to $200,000 or $100,000 and lose out on potentially several $100,000 where you could have protected it by just having a large deductible. So you're risking $10,000 versus having a $300,000 to $500,000 to $800,000 claim that you're protected or not protected. At the end of the process, it's up to you guys because I personally think condo insurance is pretty inexpensive. When you've done insurance for 10 plus years like I have, you see home insurances at $1,200 to $1,800 a year, and then you get the condo insurance at $350 to $400 a year. It's pretty inexpensive to do because you're gonna mostly cover your belongings is the part that people most think about, and they're trying to get the full replacement cost. They wanna have water backup in case a pipe burst. That'll cover the interior and things like that. Those are all popular and very important pieces. Also, like I said in that video of the home portion, I would say unless you're at that 500 plus per year, you may be in a good situation and you can just talk to your agent as far as finding the right fit if you have too much coverage or not enough coverage. If you are above that or just starting to look, I would recommend going below and following through that process because they will give you some idea of what options are out there for you. Hopefully this was helpful, guys. I am Mark with Think Insurance. I'll see you in the next one.